Hello and welcome to Zee Commodity Capsule. Let's start with Brent crude prices, which have taken a break from three-day rally and are currently trading below $107 a barrel on Wednesday. Even as the prolonged conflict in the Middle East and the continued near closure of the crucial Strait of Hormuz tightened the global energy supplies. We have seen that the efforts to broker an end to the US-Iran war have yet to produce some meaningful progress, while the fragile ceasefire remained at risk after Washington dismissed Tehran's latest response to a proposed peace framework. Having said so, all eyes are going to be on President Donald Trump, who is expected to meet Chinese President Xi Jinping this week. It's a three-day meet, though Trump indicated that the trade negotiations would take precedence over the developments surrounding the Iran conflict. Copper prices, meanwhile, on London Metal Exchange have surged past $14,000 a ton mark, which happens to be its record settlement in the previous trading session. Having said so, it's now headed towards the January record high levels, which touched past $14,500 a ton mark. Now, the red metal rally comes on the back of stronger Chinese demand and growing supply concerns. The recent data suggested that resilient industrial activity in China, despite the geopolitical headwinds, while consumption remained robust around the power grids, renewable energy and artificial intelligence related infrastructure. Also, as I mentioned, President Donald Trump has already arrived in China and is due to meet Chinese president over the next 3 days. Now, this he noted would be of prime because of the trade discussions that will be taking place between the two major economies. Gold prices, meanwhile, are hovering close to $4,700 an ounce, trading in a very tight range. Investors have turned cautious amid the fading hopes for US-Iran peace deal and awaited a meeting between Donald Trump and the Chinese president. Yellow metal is facing some downward pressure because of firm dollar index after stronger than expected US inflation figures reduced the expectations of federal rate cuts. US consumer inflation accelerated to 3.8% in the month of April, which is above the market forecast of 3.7% and its highest reading since May 2023. Meanwhile, India has increased the import tariffs on gold and silver in a bid to curb the bullion purchases and support its currency. Steel rebar prices have climbed above Chinese yuan 3,250 Chinese yuan per ton, approaching their highest level since July last year as expectations for stronger demand supported the market. Steel production in China remains stable, while improving profit margins at mills encouraged the firmer output and boosted the sentiment across the sector. And last but not the least, Malaysian palm oil. This is where you need to keep your eye on, because this edible oil has slipped below 4,450 Malaysian ringgit per ton, extending downside since early May and hovering near its lowest level since 1 month. Prices came under pressure because of stronger ringgit, weaker palmoline prices on the Dalian exchange and soy oil market, which continues to be soft on Chicago mercantile trade.